DMBI.com. This is Chun's Reporters for the 13th of February. Everyone's getting prepared for hearts and roses for Valentine's Day, but in the interim, we've got clear crossover magenta under 33, below the yellow, and significantly, we had the spike up of the DOC cyan, green crossing below. That was the confirmation of it right there when we broke the 76%. Not really doing a whole lot. I mean, we've had this solid gold on the shakeout, pretty much rising throughout most of it, providing plenty of support within what we would just consider the softness. We've got full retrace of positive extremes. What was the low right there? It was don't have my goggles on. But we still have a little bit further to go to be down to the 61% to get there, which would be down near the 4,048 range. Uh, Still plenty of room. And overall, the range was fairly decent, hitting back up against the resistance there, but we got continued follow shakeout. Short-term buyers potentially will be the ability to hold this on because you're following DOC red and green, so midterm, long-term buyers, but the short-term buyers have been spiking up on that, and that's usually enough to hold it, particularly when we already had orange spiking. So if it continues to break down, it would be literally off the added strength of short positions. From an NQ standpoint, a little weaker even, closer to having that significant white MBI over magenta. And if that were to cross over, I think that would really uh, potentially spell the much larger downside. Typically, though, what you get in these kind of situations is this little teeny fade, pop back up that's not able to sustain itself, and then the decline. But some people just want it to be like instantaneous. You don't always get a complete reflection from everyone that things have changed that dramatically all at once. This is what we expected. Treasury is finally pulling back towards a reasonable zone here. They were just in la la land as the Fed continued to hike. Rates were declining. It made no sense whatsoever. Um, and some people are taking advantage of that discrepancy now because um, the reality is things just look really murky, and in that murkiness, you're not going to get the simple answers like everyone thinks. Oh, things are going to flip bad, and automatically the Fed is going to start cutting. Things are plugging along. It's not great. It's inconsistent. It's regional, and that poses a lot of problems now. Given the fact that in the past inflation has always been a detriment and caused economic pullbacks, okay, that's true, but you also didn't have excess liquidity and a massive bubble that had created enormous resources for people to draw upon in the past. So things are different. We also have a significant increase in government assistance in a lot of different areas, so it changes things. Oil still hovering right around that 80. It's problematic. Really, you would see a significant benefit to the economy if you get that oil price well under the 70 range. I would, in the upper 50s would be ideal, but um, that would make a huge impact on productivity and freeing up cash flow for both companies and just regular individuals. From a gold standpoint, puts pressure on gold because we're going to be in that lull of our inventory is too high. Is there going to be some price deflation? Um, if there is going to be, it's going to be modest at best because replacement costs for everything are still through the roof. Euro just hovering right around that middle point now between the range. Again, I said they could go down to the 104 and then back up into that 108 has been pretty much that comfort zone. But without kidding ourselves, that the euro shouldn't even be above par because it really, um, the economy is a disaster. And their debt levels are just skyrocketing, even worse than the US. So, relatively speaking. So, Bitcoin on its crossover finally had that DOC spread coming through. This was always elevated, but it had held up pretty decent until we started seeing the breakdown here, the magenta was holding up, but as we dip below that -13, that becomes more weakness. So that's a little different than what you're seeing on the market because on the ES and that steel was above the -13. So it coming from the bottom versus what this is, which is steel coming from the top, if you think of it as a tubular effect. And ETH doing identical, and basically all it was is just that consolidation has just been eased out. Doesn't really seem to be all that traumatic. We do have positive extremes though that take it back just a little bit further down towards the 38% move. Don't know that it's ready to hit that. Of course, yes, it did my reboot, and lovely. I'd be waiting for this data to pop back up. Hopefully, it'll be there before market time. As always, though, look for me in the Skype chat. Trade well. We'll talk to you later.